Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. So today I'm joined with Anthony Georgiades. How are you doing today, Anthony?
Doing great. Thanks for having me.
Yeah, great to have you on the show. Before we get going, maybe you could tell listeners a little bit about your background.
Yeah, absolutely. So originally from San Diego, California, made it out to the East Coast for college. Went to University of Pennsylvania, did the business program there undergrad. Spent some time working at a venture fund, first round capital. Went back to Penn, did a master's in comp sci and robotics, and then got started with innovating capital about 7 or 8 years ago.
Nice, nice. So what drew you to get into robotics as a master?
Yeah, I was very interested, obviously, doing the comp sci degree. Frankly, it was an advisor of mine who I'd become very close with. He oversaw the robotics division itself. Um, Interestingly enough, I'm sure we'll talk about it a little bit, but very long time ago at first round, one of the first investment theses we looked at was AI-driven chatbots, which was almost 10 years ago now, which is crazy to think about. Timing's everything. But that got me interested in the world of AI, computer vision in particular, deep learning. And so, people think robotics and, they think about the hardware play, humanoids, etc. But obviously the software angle of robotics is just as important. And that's really where I spent a lot of time focused on.
Nice. So if that was your passion, why get into venture capital?
So part of the need or really desire to go back and really kind of become a little bit more technical in terms of studying and proficiency, it actually stemmed a little bit earlier on. I was a freshman in college, thought I was extremely smart and created a startup. Ended up getting really ripped off by a developer that we had hired. Days before we're about to launch the product, he came clean that he had not done anything. Startup ended up failing, and I decided that I needed to become much more technically proficient, especially with how the world was evolving. And as I really dove into the engineering background, started to really appreciate and love it more. And this really also came into play when I spent some time on the venture side. Loved looking at emerging technologies, new trends, what's the world going to look like in the next 10, 15 years. But the gap in understanding of some of the technical nature of these products, especially in the deep tech side, really was a little bit of a barrier. And so part of it was really coalescing that gap in understanding in terms of going and getting a little bit more of a technical degree, both in terms of sourcing, diligence, just being able to really understand and speak with founders. Most importantly, knowing what I don't know, being able to surround myself by researchers, domain experts across those sectors and spaces that could really cover a lot of those gaps.
So what are the most interesting trends you're seeing right now in technology?
Just in general or any specific sector?
Uh, whatever you want to, whatever you're seeing, it's up to you.
Yeah, so I guess just, for quick background on what we do, Innovating Capital is really focused on, identifying highly disruptive trends ahead of the curve. You really embrace, a first to find mentality of sorts. And this encompasses really the world of, deep tech infrastructure, ranging from cybersecurity to enterprise SaaS to Web3 infrastructure. And we're focused on really staying ahead of the curve, trying to identify these trends, prior to really the vast herd of other investors and venture funds out there, which is hence, why we consider ourselves to really have a first defined model. 95% plus of the investments that we do are really sourced by this bottoms up, thesis driven, proactive approach. So across those sectors I mentioned, some of the trends that we're excited about today, that I've really been looking at, obviously at a high level, it sounds extremely interesting and, buzzwordy. But we're seeing a lot of real use cases finally starting to emerge in the world of Web3 that really take this sort of agentic and AI approach to it. That could be things like on chain inference and verification, You're looking at projects like Jensen or Modulus, which are really making AI inference verifiable on decentralized compute networks. There's things like zero knowledge proofs that are starting to be applied to learning. Think about the ability to verify model output, have federated learning, or even like this decision tree outputs or audits. You know, Verifying a stable diffusion output that came from an unmodified model on a decentralized ledger. I think that's going to be extremely important, and obviously the future of Web3. Then you have things that are more commercial, decentralized GPU marketplaces. You know, how do you become the AWS of AI in a decentralized format? Um, the alpha that we're looking for is AI native chains that are really solving a lot of decentralized training and inference protocols that use, what I refer to as like, ZKML, to verify the black box are somewhat slept on. I think there's been a little bit of confluence where you've had a centralized AI race, and then you've had a Web3 race that's been a little bit more influenced by some of the macro over the last 12, 18 months, particularly with the new administration. We're kind of down the middle looking for a lot of deep tech infrastructure opportunities in the space.
So, yeah, I mean, I understand what you mean. Some of the listeners may not understand a lot of the language you just said, but let's try to break apart different industries just so we can kind of understand. So, explain Web3 and how that ties into blockchain and crypto.
So I guess in terms of just more high level, um, think about obviously if you go back in time to really what Web one and Web two was, right? Web one, really kind of the read only web. Web two is obviously the read write web. Think about things like Facebook, Google, creating a blog post, Instagram, etc. The great thing about obviously Web two is it created a world where you could obviously interact globally. But what happened is the more accessibility that was developed, the more that centralized enterprises really started to capture and extract data from the underlying users. So Web3 is really the read, write, and own web. Basically, Web3 shifts the power from the platforms or these centralized intermediaries back to the users. And it uses, obviously, different parts of the stack. Blockchains, for example, which allows for data storage or databases and whatnot to track transactions and to track users. Tokens, as you alluded to, obviously are leveraged to incentivize users to interact with these new types of enterprises, and also provide almost somewhat of a residual claim or ownership. So imagine in the case of Apple, instead of basically owning Apple's stock, which provides you a residual claim to go and basically get free cash flow tied to earnings growth and new products and whatever it might be. In the world of Web3, almost think about it like akin to an Apple token would still provide you with the same benefit that a stock might have as well. But you can also use that token to go back and interact with the Apple ecosystem itself. I use my Apple share of sorts to go and buy a new iPhone. I use that Apple share or stock or token to pay for new data on my iPhone, to send certain types of messages on iChat, or to post photos in iCloud, whatever it might be. And that's really kind of the interconnected world of Web3. Read, write, own via tokens and these trustless sort of systems. So if you want to kind of map it to real industries, right? Take finance as a key example. The problem with the financial services world in general is there's plethora of middlemen. You have slow settlements. There's potentially lack of accessibility. If you are basically let's say you're a manufacturer and you want to protect yourself in terms of exposure to tariffs and whatnot, and you want to lock into a specific commodities price, or potentially, with some sort of fixed to floating rate derivative, you have to basically probably put up 1 million of premium in order to put on that hedge, right? The world of Web3 allows more decentralized access. I don't have to call up Citibank or Bank of America and put down this trade. I can effectively interact directly with a counterparty where the blockchain and smart contracts and things like that can aggregate liquidity from different users around the world and find me a direct counterparty immediately. 24/7 access, global access, instant settlement, programmable money, etc.
Nice. So yeah, it always brings up the question in my mind of why do we need banks anymore? I know banks have seen this. That's why you see all these clips of Jamie Dimon and all these others saying, "Oh, crypto, it's useless. It's a worthless token," and all this, and now they have to kind of accept it. But how is this all going to play out with banks? Because I feel like that's one of the things people loved about it is you don't have to deal with the banks, but we still do.
Yeah, no, it's so it's $1 trillion question, maybe larger, right? The question is, I guess what you're getting at is, if Web3, if crypto, if it's programmable money, why do we need banks? Um, so banks obviously still matter today, um, and we're certainly far away from the Web3 future that we're obviously betting on now. The first component is the legal and regulatory framework, I would say. That's a true intrinsic moat. Banks inherently they're licensed to custody fiat. They originate loans, process payments, they hold deposits, and they're really part of like the sovereign, money system, whether it's FDIC, Basel III, central bank access, whatever it might be, right? Governments want control over money flows for taxation, AML, monetary policy. I won't comment on this, but as a side note, the Tucker Carlson Roger Ver interview that took place a couple months ago, uh, definitely will give viewers a bit of more depth of why there is a certain narrative and why banks operate the way they do. And I definitely recommend listening to it to the audience out there. But beyond that as well, banks are really kind of trusted infrastructure. Majority of economic activity today is still fiat. It's not crypto. Corporations, they need ACH, they need wires, they need credit lines, they run payroll, they need compliance, right? Consumers need mortgages, auto loans, whatever it is. Crypto isn't going to replace fiat overnight. It has to really start to bridge in and work in a more interoperable way. Um, then the other thing I want to kind of mention at is the monetary policy regime that's effectively predicated on fractional reserve banking. Banks take deposits, extend credit based on capital ratios, reverse repos, whatever it might be. There's real leverage and credit creation that's native to how banks operate, which can't necessarily occur today on crypto. The thesis is that monetary policy and fractional reserve banking systems will become at one point unsustainable and collapse. That's part of why Bitcoin was created as an alternative to it. So I think that's important for users and listeners to really bifurcate between the crypto use case as fiat currency and replacing banking, which a lot of long-term Bitcoin holders believe is still going to happen, and then the future of Web3 and decentralized finance, where certain kind of components and features that are somewhat insulated to large institutions become more accessible in the world of Web3 itself. And depending on what you think about the future, they might intercooperate or it might replace the entire thing.
Okay, cool. So if you had to pick one industry, you're looking at, well, let's just say hypothetically, unless you have another choice, AI, robotics, or Web3 slash blockchain. Which do you think has the most uh, interesting innovation and potentially the best opportunities in the next 10 years?
It's a loaded question. Obviously, there's a lot of interplay between um, those various sectors. Obviously, there's a confluence as well, right? Robotics only works in such a way where certain levels of AI, computer vision, machine learning are at a head, and some of that is driving AI, right? Um, if I had to pick one, I'd say basically I would more frame those three as follows. So AI is definitely the most inevitable, right? Genie's out of the box. Obviously, we've seen what happened over the last, 12, 24 months between Musk and what he's been trying to do to almost prevent the race from continuing to unfold. But why I think it's the most exciting is it's already here. The pace is exponential. Every company has to become an AI company. It's electricity level transformative, right? It's just going into hyperspeed. You have obviously foundational models that are continuing to get better, whether that's GPT or cloud or Gemini most recently. You have agents and tools that people are using. Um, then you have obviously a new kind of wave that's going to even further compound what's happening: model compression, distillation, on device inference. It's going to get crazy, right? Um, and really, I think the biggest challenge to the AI race is going to be really across two particular items. Um, Models may potentially plateau at a certain time, not foundationally because of the underlying um, inference or LLM accessibility, but from more of kind of an infrastructure and scalability play. And so when your model starts to plateau and anybody has access to a commoditized model, what becomes the advantage is data. And so enterprises with particular types of siloed data sets will become really the oil that fuels the overall kind of AI world moving forward. I think it's more of like a winner take most in terms of why AI is most exciting. Um, but I would say that similarly speaking to that, Web3, while AI is the most inevitable to be the most exciting, I view Web3 as being the most disruptive. So while AI is almost predicated on existing industries, centralized entities, and whatnot, advancing and innovating further, Web3 is still on the side disrupting those same centralized entities. And to me, it's still early, it's still very noisy, still regulatory uncertainty. There's user experience and interface issues and frictions. There's lack of really these kind of killer dApps that people have been talking about for years. But the thing that's interesting about Web3 and why it's potentially larger than AI overall is because it doesn't necessarily just replace markets. It really creates new markets that we haven't even considered and almost rewrites the institutional framework that we have today.
So, I've heard uh, a lot of talk from various sources of people involved. I know you mentioned Musk doesn't want it to expand, and I think I've heard a lot of comments from a lot of big tech company executives who've been very concerned about, even though the genie's out of the bottle, but they're concerned about where that could go. And I don't know if it's this zombie apocalypse kind of scenario, the Terminator that they're worried about, but to me, it seems like there is some serious concern leaking out from the people involved, where they're concerned that things could go in a wrong direction. Um, wh- what are you seeing in that side? Are you seeing the same things, or like where's all that coming from? Because that's assuming that we're going to have sentient AI and that everything is going to be run by that, as opposed to different individual AIs or all these different resources. So how do you see that kind of playing out at the moment, or where's that fear coming from?
Yeah, so Turing completeness is an interesting thing. Like it's been a test for years and years, and the most recent Gemini model was Turing complete, right? The human interacts with both a human and a machine and can't discern between the two. It's Turing complete. It's how smart it is, right? So the concept is always here, like building something smarter than us, faster than us, more scalable than us, and we start to we can't control, align, or predict it, right? And so I think a few things. There is the economic shock, which is a concern. Displacement of knowledge workers, customer service, marketers, coders, whatever it might be. Um, and then there's the like potential weaponization, LLM agents or autonomous drones, acting outside human control, right? Countries racing to develop these like black box AI weapons with no safety guarantees, right?
Mhm.
Then there's, the misinformation at scale, uh, synthetic media, impersonation, whatever it might be. Well, this is stuff that's going to happen. It's happening already. These are risks that we've obviously, known about. Um, the more existential risk is really the Elon, you know, Bostrom warnings, right? Once we build this AGI, artificial general intelligence or super intelligence, it might not even care or even, notice us, right? And the assumption here is that intelligence does not equate to morality, right? So if you give it a goal, you know, maximize paper clips, right? Something so simple or mundane or non-sinister. It could, wipe out humanity as like an unintended, side effect. It could recursively self-improve, um, effectively like bootstrapping itself into this like almost god or alien-like level of power. And the control becomes impossible once it's outthinking humans at every level, right? So it's almost like a genie without restrictions and a genie without instructions. And that's the issue. Um, and that's the concern that people have, right? So people have been talking about this for years. Um, what we should be doing is more AI governance, open models, auditable weights, decentralized inference. This is why Web3 is so big. Um, and potentially public infrastructure for AI to prevent monopoly capture and almost treat alignment somewhat like we do with like nuclear safety. You have like multilateral cooperation, not PR campaigns per se. Um, Problem is, this is software. It's not uranium enrichment facilities, right? If you, the listeners who ever remember Stuxnet, obviously the debacle with Iran, um, there was physical evidence of what was happening with uranium enrichment and what that might be used for, and breaking obviously the NATO treaty. But in this case, this is software. It's harder to effectively audit or monitor, especially when you're talking about countries with closed data centers and things like that. So it is very, very difficult to control. So I do think that the risks and concerns are real, but we can't just unplug it right now. Um, and so I think that in general, the genie's out of the box, but it's not a crazy zombie apocalypse type thing. It's more loss of control over systems which we depend on, and there's really no kind of off switch against it.
Yeah, it comes back to reminds me of that TV series, Person of Interest. I don't know if you remember that, where there was basically an AI, and two AIs went to war, and it was an interesting concept, but this is back like 13 years ago. The show came out, so crazy to think about. All right, so that's fine. So let me ask you this, before we kind of wrap it up here. So what about robotics? Because, everyone's all hot on AI. Microsoft's CEO came out and said, well, he gave a kind of like a wet blanket answer to, well, it's not going to be, GPTs that are going to be the future. It's going to be other stuff. But robotics, people don't seem to talk about, but it always seems to be there and making progress, but not quickly. So where do you see that going? Is that an area of opportunity, or how do you see that?
Yeah. So, I mean, the thing is this, right? Robotics is still very compelling in general. The physical world, a lot of people say, is kind of like the final frontier of this sort of like current wave of economic disruption and innovation. Once robots can kind of see, move, and act intelligently, right, the economy changes forever. We've made certain robotics investments. If you think about obviously where the world is going, things are becoming even more important. Vertically integrated farming, autonomous farming, things like that, being able to do things efficiently at scale, feed the next 10 billion humans, right? Um, there's innovation that's happening and working across all sorts of different aspects of robotics, whether that's Boston Dynamics using like embodied AI, whether that's autonomous vehicles. Yeah, that's obviously still happening, right? Whether that's low cost robotic arms for small and medium sized businesses or retail or aging populations, warehouse automation, whatever it might be. The challenges have obviously been cost of hardware. Um, COVID, believe it or not, was a huge um, roadblock and challenge for a lot of robotics innovators. Supply chain disruptions bankrupted multiple companies, unable to fulfill POs and really continue to operate. Um, there's a lot of safety, regulatory issues, and real world reliability issues. Think about obviously the philosophical conversations we just had about AI. Now think about it with regards to a autonomous vehicle. It's the same philosophical question, right? If I need to avoid a pedestrian in order to, and doing so, I hit another car head on. What's right, what's wrong, what should I have done there? It's happened a few weeks ago. Pedestrian fell into the front of an autonomous car. It swerved out of the way, hit a car in oncoming traffic. What should it have done? The main thing though is the long iteration cycle relative to software. Um, and where we have spent most time looking at robotics has really been in tightly coupled, controlled environments. And basically, what I mean by that is a specific robot that is focused on a very discrete task and can iterate on a controlled set of software very quickly. So, not a humanoid that's going to just, uh, become a housekeeper and do a bunch of mundane, you know, substantive and non-discrete tasks, one task very literally very well. Um, why this may change and accelerate further is that these AI models that are coming out, these foundational models, are very quickly being applied to vision, motion, manipulation, GPT plus robotics. Now you have agents that follow natural language, sort these by color, sort this by this, pick up this. You have multimodal models that turn vision and language into actions. So robots are actually starting to gain general purpose, brains of sorts instead of being task specific codes, right? Um, there's a language, modal language that different models are able to actually speak against each other. So you have robots that can actually now talk in specific type of hyper efficient code. So think about like a robotics for travel assistant talking to a executive assistant, right? And they can now communicate in terms of what their instructions were in a completely different language. This is happening, right? Um, then you have, obviously commoditization of hardware. Companies can buy parts and assemble things like, Unitrees or X arms or Spot from Boston Dynamic and assemble them like PCs without necessarily building them from scratch. So hardware, which has been a huge incumbent for the reason why I mentioned, or a huge really kind of barrier, is becoming more modular and mass manufacturable. Robotics as a service, these are business models that, are becoming very much so underwritable and investable. Uh, Instead of going out and paying 100,000 bucks a robot, you might pay 35 cents per pick, 10 bucks per hour. This lives in warehouses, cleaning, restaurants. You have recurring revenue, low capex acquisitions, and it's a much more investable opportunity for venture capitalists, and that's actually provided a huge confluence of funding into the space and has reinvigorated a lot of innovation.
Nice. That's great. It's great to hear. Well, as we kind of wrap it up, I appreciate you sharing your wisdom with us, Anthony. Any kind of final thoughts you can leave us with, and where can people find more about you?
Yeah, I think the best place is on Twitter at P Anthony LG, and then obviously the fund Innovating Capital. Innovating Capital um, domain is innovating.capital. Twitter is Innovating Cap. Follow us there for the latest and greatest. And yeah, look forward to staying in touch.
Awesome. Well, I appreciate you coming to the show, Anthony. I know innovation's not going to stop, so appreciate you sharing that with us, and we'll definitely have you back on the future. So thanks for joining us.
Sounds good.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. I mean, like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. All right. That was a great interview with Anthony. Really appreciate him coming on the show, sharing his wisdom with us. Now we're into the panel portion of the show where we have our very own Barb Freeberg. Hey, Barb.
Good morning. So excited to talk about the future.
Well, glad to have you. And we have our very own Phil Weiss. Hey, Phil.
Hey, Kirk. Hey, Barb. Good to be here. Looking forward to a good conversation as well.
All right. Well, let's dive right in. So, Barb, what were some of your thoughts from the interview?
Well, we are definitely in a transition period. We are going from Web 1, Web 2 to Web 3. We're getting into the blockchain. We've got cryptocurrency. We have robotics. The future could go in a and oh, don't let me forget AI. The future could go in a multitude of directions. Frankly, I'm still waiting for the Jetsons flying cars. But other than that, we don't know what's happening. So today, what I want to delve into is how do you make sense of all these impending changes? And what do they mean for our investment portfolio? How can we profit or benefit from them?
Yeah, Barb's behind the times. She's only on Web 3. I'm on Web 9.5. So, get with it, Barb. Phil, what about you? What are some of your thoughts?
Barb's right. These are interesting times. Things are changing rapidly. And the one thing I know is there's no way that I can forecast where they're going to go next. None of us can. So it's really interesting to try to figure it out, to watch, and to take advantage of those things that are changing that we can use.
Yeah, it's interesting. I mean, the future is obviously very unpredictable. There's some people who've done it well, like Ray Kurzweil has done a great job at predicting the future for quite some time. He's written a few books about what will transpire with relative accuracy. And considering, I think he's a consultant or advisor to companies like Google, so he knows what's going on. So he probably has some pretty good insights as to what the future holds. But for the rest of us, plebs, we don't really know, as Barb and Phil said, and I think the Jetsons are a perfect example of this. I'm still waiting for my flying car too, although they do exist. I'm not sure if I actually I've heard they exist, and you don't even need a license to fly one. They're just hard to find. You have to build them yourself, but I don't think they require a license yet. But anyway, so Barb, so tell us, with technology advancing so fast, I mean, you've been around for a while. You've seen this game before. Um, you know, what was the late 90s or say the 80s, 90s like? Because that was another transformational change where we went from everyone had their own information, no one shared it, to now everyone's got everyone's information, everyone's sharing it. What was that transformation like for you when you went through it?
Well, first of all, I remember my first computer in 1988, and we had to hook up to a modem, and it like took forever. But it was so cool to have this new computer that did whatever it did, um, which is like nothing compared to what we have today. And then fast forward into the end of the 90s, the internet boom, the tech boom was insane. There were hundreds and hundreds of companies capitalizing on this new technology, coming out with new platforms, new uh, types of software, hardware, everything. And so, first of all, what do you do? Well, you go with AOL because that was the biggest search engine at that time. And what computer do you get? Well, maybe you'll get a Dell or you'll get a DEC or something that is not even here today. And what I learned from that, and also being an investor during those times, was you have to be really careful before tying your future to one or two companies, technologies that you think are going to be the one, because we don't know who's going to survive and who isn't. And I think we don't know how these trends are going to play out until they actually do. So, as users, as consumers, look, there are some people that are gamblers, and that's great. You gamble on a trend and you become like super rich if you pick it right. But for the rest of us who are maybe a little bit more conservative, my advice is keep your eyes open. Use the technologies that suit what you are doing. Be ready to pivot because certain industries are going to get slammed and others will evolve. And if you're wedded to, I loved this example, if you're wedded to being a blacksmith, when cars come into fashion, you're going to be out of a job.
Unless, of course, you're making broadswords, because those don't have much of a market anymore either. But you can make horseshoes. There's still a market for that, Barb. Uh,
I think that market is probably smaller than it was in the 1800s. Just guessing, no research to back that up.
just like the deck, there's a smaller market for decks too. I don't even remember decks. I remember Commodore 64, Apple IIe. That was what I remember.
Yeah, the Lisa, I think, was another one.
I don't remember the Lisa. I mean, I remember seeing the movie about the Lisa, and I don't remember anybody buying it. But when did that come out? Was that before the Apple IIe or after?
I don't know, but all I remember is my first computer was made by Mac, and was one of those very, very early early models. And one of the things I remember that I thought was so cool then was the drag and drop feature. You know how you can drag a window and drop it or whatever. That was like, this is amazing. And you can't do this on a Microsoft machine, only on Apple.
I do remember that. Yes, I remember the all-encompass the Macintosh machine, like the
Yes.
first Macintosh, when it was like this big, tall, skinny box. Everything you just put in a square floppy
Yeah.
disk in there. Those are amazing. They had great graphics. They had some games. I was in high school. A lot of
Yeah,
fun.
yeah. They were wonderful. In fact, I think, it wasn't long ago that I just got rid of the software for those things. I'm like, I don't need this anymore.
Pretty sure that doesn't run on the internet, Barb. Oh, that's amazing. Well, I'm sure you can get a lot of money for one of those now. They're definitely hard to find. Phil, what about you? What was your experience like going through the transformational 80s and 90s with technology?
Well, you guys have left some stuff out. I remember I started with Deloitte in the tax department, and you talk about like the modem. And so when we did tax returns, there was a company in Dallas called Fast Tax, and that was who processed our returns. So we would fill out these paper forms and send them by overnight mail to Houston or Dallas, whichever one they were based in, so that they could input them. And then we'd be able to look at the results. And then we'd have to go connect by modem if we wanted to make changes that we didn't call in. And, on these old computers, and it was such a slow process. And it was crazy. And then I started to specialize in international corporate tax. And we had this when companies move money across borders and you want to get credit against your US tax liability when you bring the money back home. We used to do this, it was called earnings and profits analysis, which was looking at how much money the company had earned. And I used to go and became like an expert in this. And I had this compact. That's the one that you left out. A compact, and that was like that version of the laptop. But this thing weighed like 40 or 50 pounds. Like it was in this big bag that you put over your shoulder, and it was orange font, and it was, and I had this Lotus series of Lotus macros that would run. Lotus was before Excel, for those that don't remember that either. And it would take like 20 minutes for it to make the calculations. Now, like it would happen instantaneously because computers are so much different. But it was so different. But I do remember too when I was writing for the Motley Fool and helped managing their online portfolios as Y2K came. And it was crazy back then. Back then, when I was working for the Fool, like I wrote an article and I just put the names Nortel, Cisco, Lucent, and JDSU Technologies in the title. It was the most clicked on article that anybody at the Fool wrote and that was important back then because that's how companies got paid by getting clicks and they would make a lot of money. And then after the internet bubble, like that stopped and had to get paid different ways and the Fool totally changed their business model. But it was crazy back then. And all those companies, there were so many companies and so many opportunities. And a lot of those companies are gone, like Lucent's gone, JDSU, those companies I mentioned, the only one that still is here is Cisco. And Cisco hit a price back then that it's never returned to. And it was just crazy what would happen. But I do remember though, when I think about it from an investing perspective, like it's really hard to pick the winners if you decide that you want to do this. Like I still think back, there's a book that I read back then. I think the author's name was Jeffrey Moore. It was called The Guerrilla Game. And his idea was that if you wanted to invest in something like this, like you would invest in a basket of companies instead of just one. Because as long as the one or two companies that were successful were included in that basket, didn't matter if the other ones all went to zero because you can make such big gains from the ones that were successful. I'm not saying that everybody should go out and do that, but it's a lot safer if you decide that you want to try to invest in these kind of companies to pick a basket because you really don't know which one's going to be the survivor. It's really hard.
Well, and that's where a sector fund comes in because
Yes.
today we're so lucky we can pick a sector fund for anything, for AI, for robotics, for blockchain, for whatever. You can buy a sector fund and say, okay, I think the sector's going to go up. over time, and you don't have to worry about picking a winner.
That's
Yeah,
right.
it's interesting. I just kind of reflecting back, you mentioned a bunch of things, Phil. I mean, Lotus 123 or Lotus Notes, like that was really old school. I remember when I was in elementary school, one of my friends, his parents were from MIT, they're techies, and they had he had a Microsoft computer that he was gaming on. We had playing these games and they were fun, but there was no, it was basically like a cursor and you had to write a prompt to get it to run. Like it was, it was crazy. Like it was just, you think about now, like if nobody experienced that, you have no idea how bad it was. Or what are they, dot matrix printers? The ones where they had the spools on the end with like the prickly things coming out, and it would like roll forward.
Oh
And
yeah.
I
Oh
had
yeah.
paper with like different colors, like one was white, one was blue. Like there was all this old school stuff. You're like, how did that stuff ever work?
Kirk, did you ever try to run? I remember taking a computer class in Fortran, and it was punch cards, and
Oh wow.
you had to write a program, and like punch cards went through a computer, and then you'd have to look at the output to see if it even worked because it
That's
wasn't
before my time.
instantaneous like it is now. But you had to run the punch cards and then see what the output was to see if what you did worked.
So when I started, we got the first computer we got in the family was an Apple IIe, and I took computer programming classes from this lady locally, and we learned how to do BASIC, and we had like the turtle. They called it the turtle, and the turtle would go out, and you see it go out. It was a really cool experience to do, but it was all visual. It was like Visual Basic, and it was fun. Like it was a lot of fun. Like learning that stuff and being on the edge as like a 7-year old or whatever it was. I was like really young and I was really interested. I want to make my own game and all this and I had no idea what I was doing. But there's you know, I lived in Boston area, right? MIT's around. Like we had all the best geeks around were in my area. Like everyone, it was really cool. There were a lot of stores where you could buy. Remember back then you could make your own computer? Like people were doing that. They were hobbyists. They're making their own computer and they're like, "Oh, well you could buy it. Yeah, why buy it? We'll make our own." Like it was such a cool time to be in and I was too young to I guess appreciate like when like people like Bill Gates started and he was older so he had some more context but it was a fun time to go through that age and to see all that happened and to see it now like think about it like when did the iPhone start? When do you guys think the iPhone started? Without looking it up and cheating.
Was it like
I cannot remember.
2000 and I want to say like 2000, sometime between 2005 and 2007, I want to guess.
Well, that's cheating, Phil. Come on.
Well, I think that's the best. I'm not looking it up.
Okay,
That's the
all
best
right.
I can
You're
do.
you're you're correct. It was released on January 9th, 2007. 2007. Like like that we're 18 years ago, but it feels like it feels like it was in like the early 2000s. But and like when did Google happen? Like I started to use Google I think 2002 or 2003. It came public I think in 2004 maybe. But like you think of all this tech that wasn't there at the beginning. Like that 20-year period where you had Commodore, you had you said you had Compaq. I don't remember that. There was
Yeah.
Apple, IBM was a big deal back then. I don't know if they're so much now, but they were a big deal back then. Like the things, the companies that were on the decks, like what was the other one? Wang Computers. There was like the corporate headquarters. I think there was a huge building on a highway nearby us, and it was always known as the Wang Building, even after Wang was no longer a thing. Somebody finally bought it and changed the name, but it was like all these things they're no longer around, except for Apple and Microsoft, but very few are still around.
Well, just to give an example of what not to do now, just when I was in college, I had a job as an invoice clerk, and my boss had a really successful industrial parts company. And so my job was to type up the invoices to send them out. And he kept everything on these cards. And I remember him saying, "No, we're not going to computers. No, that is not a good idea." And note to all of you listening out there, don't fight it because the change is going to happen with or without you. So you might as well profit from the new economy, from the new technologies. You might as well use them and stay current with the changes that are going on, the gigantic changes that are going on in our society right now.
So I actually want to reiterate a point Barb just said, and it was something I wanted to say, which is the future doesn't care about what you want, right? It doesn't matter whether you want to fight it or not. The future is going to happen. It's going to keep moving forward. So all those people still selling buggy whips, good on you for fighting the trend. But the reality is the future is going to move ahead. And even if you don't want it, even if you don't like AI and you think it's going to be the Terminator apocalypse, um, there's not much you can do about it unless you are like the Ray Kurzweils of the world that are in that doing that sort of thing. If you're not, there's nothing you do about it. So just go along for the ride and just try to understand it the best you can and try to apply it. And as Barb said, profit from it. So, but there's thinking about what we talked about with Anthony. I mean, you've got a lot of trends. It's not just computers, right? There was computers, then there was the internet, the modems. Like I didn't get a modem until, oh God, it must have been in the 95, something like that. Like, where the War Games movie where they had the sound, you put the phone on, it was really weird. But anyway, so if
Yeah,
you think
we
about,
had actually computers and no internet, right?
yeah,
I mean, you
right.
started with just having a computer and you plugged in a software program, and that was it. There was no internet that was accessible for everyone.
Yeah, so if you think about like War Games, like the movie, and if you haven't seen it, go see it. It's a classic. But basically, the idea was back then there was a modem and you can connect with other computers, but it was what they call Web 1. It was read only, right? You could read other computers, but you couldn't really write to the internet. There wasn't really an internet. It sort of, but not really. Then Web 2 was, right. So now you can just put stuff on the internet all you want. What I'm fascinated about is right now we're in a crux of centralization versus decentralization, right? The internet started by decentralization to protect information from a nuclear explosion, right? That was kind of the thinking when DARPANet, it was a DARPANet, one of those two. But anyways, it's DARPA. They came up with this idea to protect information in case of nuclear war. Well, great idea, and turns into what we got today. But what if you think about like right now, a few companies hold all our information and they profit from it. But what if you could own your own information and decide how you want to profit? Decide if you want to sell your medical information to research companies so they can research it. Decide if you want to sell your personality or your NFTs or whatever you're doing. Like that to me seems like a great world to live in, but big companies will probably find a way to own it. So I don't know. What do you think, Phil? Like, do you think this is the zombie apocalypse, or do you think this is, going to be the other side of the spectrum?
I don't think it's the zombie apocalypse. No, I mean, I think that you have to be careful, right? Like, it's easy. You have to be careful. Like, so much information is out there about you, and then you have to think about what you're putting out there sometimes, and you have to worry about protecting it, right? Like, I know if I go to the doctor and they want to get my social security number, I don't give it to doctors because they have such a poor track record of protecting information. Every time you see that there was somebody's got hacked, it was a doctor's office. So you want to be careful. And like, I know a guy that he can go and find, I'm amazed at the information that he can find about people because he knows where to look. So you just want to think about that when you're going out there and using all this social media and putting all these things out there because there's a lot of information that people can find out about you. And like you think about our kids and without realizing it, they could go out and do things and say things that could come back to haunt them in the future. So I do worry about those type of things, but I also think that it's part of our lives. We can't avoid it. It's just like AI. Like, should you use AI? I use AI because there's ways that it can help me. So you have to be able to adopt and move with the times. And we made that whole big list of all those companies, and a lot of them aren't there anymore. And that's something else I always think of too. There was another book that was written a long time ago by Clayton Christensen called The Innovator's Dilemma. And when he writes that in that book, one of the points that he makes is that the leader in whatever technology it is today is unlikely to be the leader of future technologies. And part of the reason for that is they got to protect their turf. And it's really hard when you're making good money doing what you're doing to go out there and invest in the next thing that might kill what you're already doing. You're hesitant to do that. Apple and Microsoft are unusual and they've survived through all this and they've continued to grow and adopt, but not all companies do that. You know, we talk, Google's still around too, but what it's going to be interesting to see, and this isn't meant to be positive or negative from an investment perspective, but it'd be interesting to see what happens with search and everything else as AI becomes used more and more.
Yeah, I mean, you make some great points, and I want to follow up on some of them, like Social Security numbers. My dad was an attorney. He always taught me, to protect the information, and he always had these weird laws that he knew about that most people didn't know, which was before the Patriot Act. It was a federal offense to ask for your Social Security number unless you're at the DMV, a bank, or your employer. That was it. No one else could ask for your Social Security number, but everyone did. Credit card companies would ask. It was illegal for them to ask. It was a federal offense. They used to ask all the time. They'd apply for a credit card and they're like, "Oh, I need your social." I'm like, it's a federal offense to ask. And they would be like, yes, they didn't know. And I would get, back then, I got a credit card without a Social Security number. You can't now, but the Patriot Act changed that. But back then, only a certain people could ask for it, even ask. But now it's everywhere. Like I don't even know why it makes sense to even protect it because everyone's got it. I mean, the Equifax hack 15 years ago, they grabbed what, 250 million social security numbers? It's out there. Like I'm not protecting anything. Um, so I think the interesting challenge with that is what happens with the decentralization because the whole point, and this is why I'm just fascinated with the concept of blockchain. We have been trying to fight this fight of protecting our privacy, protecting our information. We've been trying to fight it for a long time, right? It's the whole like, if you speed, they got a radar gun. If they got a radar gun, I got a radar gun, detector. And then they got a radar detector, and then I got a radar detector. It's like you have this back and forth constantly. People just spend money because they're trying to fight this battle when the smart move was just don't fight it. The smart move was put it out there so everyone can see it. But now that everyone can see it, everyone can validate it, and that way they know it's yours, right? And it's just a weird sort of protection that somebody could steal your money, yeah, but not if it's Bitcoin unless they're like make you divulge your password, but otherwise nobody can steal it. So it's this weird sort of protection that happens because you've given it out to the public. And I'm just fascinated with the concept because it's the exact opposite of what you think would be the case, but yet we've solved a big problem just by giving everybody the information instead of trying to protect it. So to me, all this technological advancement is just mind blowing. And I'm so happy to be alive in this period because we get to experience all of this. And it's happening in such a quick pace. And the implications are completely unknown. It's like social media. If you're doing keg stands or bong hits in college and you put that on Facebook, you won't get employment ever again because that just doesn't go away, right? So stuff like that, you don't know the implications of doing that sort of stuff, and it's scary at the same time. But I just find it really interesting. You know, Barb, what about you? I mean, we're in this new era. Where do you see the opportunities for people to either make money or to participate in this new technological advancement?
Well, today at, 2025 April when we're talking, there are the public investment markets, the stock market. And that is an accumulation of all companies that are public in which you can buy shares in. Now, I don't see that going away anytime soon. I don't think there's any move for those to go away soon. And many, many big companies, they list their shares on the stock exchange, NASDAQ, or New York Stock Exchange. I want to return to the discussion we had earlier in this conversation about don't try and pick the winners, or if you do, just don't put all your money in them. If you hit it big, you're a gazillionaire. And if you miss, well, you lost all your money. But I am a big believer in take a portion of your diversified investment portfolio and put it in some sectors that you think are going to profit in the future. And I think over time, should those sectors grow, I believe there are a lot of blockchain companies. And I believe the blockchain is going to continue and it's going to evolve. And I would say, look, I'm not giving you advice at all, but I would say, look at the sectors that you think are going to profit in the future, be they some clean energy sectors, be they blockchain, be they electric cars or robotics, and consider adding a sector fund or two, especially now when the markets are very volatile and they are still overvalued. And you can hold me to that, but there may be some buying opportunities, and don't look to trade up and down, but just hold them for the long term. And thereby the winners that are in those sector funds should help your wealth, should grow your wealth.
Great. So Phil, I mean, there's a lot of new tech. You're an advisor, I'm an advisor. How does all this tech play into your daily life? Are you turning into, a cyborg over there, or how are you applying this to your daily life? Because, we're getting into this new era. We're not there yet, but you can still start playing around with stuff.
I do like to play around with it too. I find it fascinating. I like to learn and I like to try out new things. So I use AI. I use it for different purposes. My favorite use of AI is when I have a call with a client. I let it be recorded with an AI tool. When I'm done, it gives me back summary notes, action items, and all those things. And the best part of it is that when I have those calls, I can really listen to my client. I don't really take a lot of notes anymore. Like I'll note down a couple of really important things, but because of the fact that when I have that call, I can really listen to my client. When I'm done, I open up that summary and I can make any changes that are needed because it's all fresh in my mind and I really listened. So I think as a advisor, that makes me more effective because I'm really listening to what my clients have to say. So I like that. I use it to help edit when I write my blog. It knows who I work with, so I can ask AI to help me come up with ideas of things. There's lots of different things. I'll even use AI to do longer searches. Like if I'm doing my basic search, I'll still go to Google, but if I'm looking for a longer search, I'll go to AI and then I know that it's not always right too. So I'll ask it, like, where did you find that? Send me a source so that I can then go look because I want to know what the source was. Because even sometimes if you have a source, it might not be a good one. I mean, I learned that a long time ago as a tax person. You want to know where the answer comes from, not just what the answer is, so that you can go and check it and verify it and make sure it's right. But I use it for a lot of those type of things. I know people that I have an advisor that's in one of my mastermind groups, and he has used AI prompts so that when he does tax returns, I don't do a lot of tax returns, so I don't want to do that, but he does. And when he's asking his clients like for information, he can go and dictate a bunch of different random sentences. And because of the prompts that he's given AI, it will organize it into a letter to the client, say, here's what I need. And it's in the format that he wants because he's taught AI how he wants it. So it makes it a lot easier. So there's lots of things like that uh, on that type. So it's more, to me, it's more on the research and on the making the relationship with the client. Like I think that recording makes it a little bit better. Clients have to approve. Like you can't just go record and not tell anybody that something's being recorded. And occasionally I have somebody that says, I don't want to record it, and then I won't. But I find that when I do, it just makes it for a more effective process. So I use it for things like that too.
Nice. So as we kind of wrap it up here, I want to get final thoughts from you, Barb, but I also have a kind of an open question I want to ask too. Is, we all grew up in an era without computers where you had to think. We learned how to think. We learned critical thinking, all the skills that we find were important of that era. But as technology has evolved and changed our lives, it has caused us to uh, I'll just say think differently, um, because we don't need to think as much. Like my dad used to, I would play around with calculators. He's like, "You got to learn this stuff. Don't use a calculator. It'll make your brain soft. It'll make you stupid." And you know, in a sense, he was right. Like it was a crutch, right, to use a calculator instead of figuring out yourself. Because if you can't figure out yourself, you can't think. Um, However, nowadays you don't need to learn that stuff. But the logic of learning it teaches your brain how to think. But nowadays with technology, we're getting to the point where you don't even know how to think. You just ask AI. So the skill is not how do you think about things? The skill is how do you prompt AI? And so we get into this era of, is that going to make us all dumber? Or is it going to cause us to learn to think differently, which maybe is better or worse? Like I always come back to this movie Idiocracy. I don't know if you guys have ever seen it, but it's hilarious. It was like I think it was Mike Judge, the guy who did Office Space film, and it was about this guy who like was cryogenically frozen, wakes up like hundreds of years later, and everyone's dumb. Like it's like everyone's gotten dumber over time, and he's like, they're pouring Gatorade on plants. Like, why won't these plants grow? I don't understand. It's like I got to skin my knee, pour Gatorade on it. It's like Gatorade's on everything. It's it's just a hilariously funny movie. And anyway, the point being is like I wonder. It's an open question. Like, how do we make sure that the next generation retains intelligence and learns to think properly in an era where we don't know what the skills are that we need to learn in order to excel. So, anyway, it's just kind of an open thought for everyone. But Barb, final thoughts from you, and where can people find more about you?
Just stay open-minded. And I like Phil's mantra, which is you just keep learning and you keep allowing yourself to be exposed to these new types of technologies so that you can keep up. You take what works for you, you don't use what doesn't work for you. And I am Barbara Friedberg. You can find me on Barbara Friedberg Personal Finance and on YouTube.
Thanks for coming on, Barb. And Phil, final thoughts from you.
So one thing I'd like to add that it goes beyond thinking. It also includes communicating. Like when I look at my kids, they talk to people a lot. And it's not just, it's their friends too. It's like that, their generation. They talk to people by texting all the time. They don't really have conversation. It's not just the ability to think. Sometimes I worry that we're losing the art of conversation. Like, why would I want to talk to somebody? I want a job that I don't have to talk to anybody. I want to just go do my job. Like that's part of the thinking too. And I worry about that as well. It's not just that AI comes and it takes away our ability to think, which is also really important, but also our ability to communicate is being, I think, in some ways compromised by the tools that we have now that make it easier to not have to be face to face with people and not have to have real conversation. I'm Phil Weiss. My firm is Apprise Wealth Management. I know experiencing big life transitions can be stressful. My job is to help empower women facing new beginnings with the financial knowledge and tools they need to make self-assured decisions. My firm is Apprise Wealth Management. We'd love to get to know you. You can go to our website and download a free copy of 5 things every woman should know about finances. That's at apprisewealth.com/5-things. Thanks for having me today, Kirk. Interesting conversation.
Yeah, glad to have you both on. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.